So, everyone, my name is David Ramirez. I'm with Tradeline Secrets, the founder of Tradeline Secrets. I help people with their businesses unlock business funding, right? Now, today I'm actually going to be doing a free personal credit builder course. Like, I'm going to teach you guys how to build your credit and rebuild. This works for both, whether you defaulted on rebuilding or you just need to get credit, okay? So, basically, the main question people ask, you're going to run into, it's like, how do I get credit without, like, the history, right? Because that is like the chicken and the egg. A lot of people can't seem to understand how to get the credit, right? That's the classic dilemma and issue with that. And so the way that you do it is this is like the fastest way to do it that I would do it, right? And then from here, like if this doesn't initially work, then you're gonna want to do this other method. But the very first method, it all stems from my business funding lives, where I talk about what's it called, like the relationship based lending, right? Relationship based lending also works on the personal side. And that's what I'm saying. Like, if you fully understand the fundamentals to personal credit, then you can scale up into business. And then from business, you can scale up into commercial. And that's literally my life. And that's what I did over the past 10 years. Okay. So, anyways, relationship based lending. Let me write that down, right? Because this is how you do it. Relationship lending. Okay. So, and then everyone asks, so what do you mean relationship based lending? Like, what are you talking about, right? And this is what I mean. This is how you build a relationship with a bank. Um, it's the open accounts, right? So, whatever open accounts you have, that's literally how you build it. And that's why so many people say, like, oh, you're going to want to open the checking account with so and so because it's going to allow you to open up the relationship with them, right? But again, we're not going to go there. I'm just letting you know, like, that's why people always recommend account opening. Now that we know it's about open accounts, this is the simplest way to do it. You just ask yourself, where is my checking, right? And again, this is for personal credit. I just probably put right here, credit, in little quotations, personal, right? Little quotations right there. So where is my checking account? Question mark. And then if you have savings and savings, right? Where's my checking and savings? Question mark. Let's say it's like, oh, it's with, I don't know, B of A. Boom. It's with B of A. Let's just pretend, right? Then what I would recommend to someone is like go to Bank of America because they have the information on your checking and savings, and they can start looking at your deposit. What's it called? Like your deposits and like how you use the checking account, how you're managing like your cash, right? Like your cash, and that all leads into the credit, right? Because it all comes down to data. Like what data do we have on, for example, David, right? Like the underwriter. Well, everything's automated now, but basically that's the question they're answering is like what information do we have? Like again, I'm David, right? What information do we have on David? And it's like, okay, all we have is the checking and savings. So then let's review how the money's coming in. Do they have, for example, negative days? So they'll ask like, does he overdraft, right? Question mark. How's he get paid? How often, right? How paid? And then again, all this, by the way, this is all personal, right? This is for personal credit building. But again, like literally, like just replace um, like there's a few concepts that you need to take out and then only focus on. But like generally, this is also how you do the business funding as well. It's all relationship based. I don't care what anyone says with their credit hacks and do this or do that. Also, many times it's just straight fraud. They're like literally asking you to commit fraud, or it's just a scam. And again, especially in the financial industry, it's like there are multiple examples of all this stuff happening, like the get rich quick schemes, like Bernie Madoff, bro. Like just look up Bernie Madoff. Like that is like a perfect example of like why anything sounding super easy in finance should ring alarms. Okay, so that's why I don't do that, and I know how to do the actual like hacks and all that because again I learned this 10 years ago when I was 21, but as I got older I realized what it was. Anyways, so does he overdraft? How's he get paid? How often, right? And that's what they're going to be asking, or at least that's what the algorithm now does, right? Because again, on the personal side, it's basically all automated. So again, building, rebuilding credit on the personal side. Focus on relationship based lending. And it's like, what do you mean? Where are your open accounts? Where is your checking and savings? And this is my example. Let's say I'm with Bank of America. They're going to ask, okay, does he overdraft? How often does he get paid? How does he get paid? Is it direct deposits? Is it cash, etc.? Okay, and that's why it's very important to manage your deposit accounts in a responsible manner, because like a lot of times you're not even gonna need to have to do like the secured cards, the pledge loans, none of that, because if you know how to manage your cash, then they are more likely to lend to you. And then of course, the longer you are with that bank, the more likely they're gonna go ahead and be like, hey, you know what? Let's go ahead and give them the personal credit card. And understand as well that just because you get a low limit, like $1,000 or $500, right? That doesn't mean you lost. All it means is they want to see how you manage it and like the relationship. That's it. So then you just need to maintain everything properly. We're not going to go into like how to manage a credit relationship right now. We're just going to go into how to build and rebuild credit, okay? But anyways, that's how everything interconnects, right? These are the fundamentals of finance. So anyway, now, after that, like, this is what I would do. With, like, let's say you have your checking and savings and you're applying, right? You always apply for unsecured first. And again, with your primary bank, the one that has your checking and savings, okay? And you go the unsecured card first. You are like if you know how to manage your cash, you are most likely going to get the unsecured credit card, okay? But if for whatever reason like it goes denied, right? Oh, denied. Ah, snap. You see, this is why I'm in finance, cuz look at that. That's like the letter D right there. Like what's wrong with me, right? Anyways. So denied, right? It's like, okay, what do I do? Question mark. Well, this is what you do. Go for the secured card, right? And you might have to put like $500, doesn't matter, right? And just anyone telling you like, oh, you need to carry a balance, it's not going to report all that, like they just don't know how the credit algorithm works. You don't have to do that, because like literally the secured cards, a lot of times they may come with an annual fee. Say it's like, I don't know, I think most of them are around $90 or something like that. Let's just say it's $90. And I know what you're thinking, but like, David, I'm not gonna pay for a $90 credit card. That's dumb. Like, and then you're telling me not to use the card. Like, how is it gonna build my credit, right? Well, it's because like, look, I used to work for Bank of America, right? And so we used to have long-standing clients, especially clients that were retired, right? A lot of like older clients that like to downsize their credit. And so they'd come to us, pay off everything, and then they just would not use their credit cards. And it's typically around like the 8th month, like around month 8 or the 1 year mark, that they auto shut down, right? So like if you don't use it, they're just gonna shut down your card. And so like that's why a lot of people say like you should use it. Like that's where it comes from actually. Is because it's like, dude, if you're just not gonna be using the card, then what you should do is like every like 3 to 6 months, just buy a pack of gum, pay it off in full, right? But anyway, the way it correlates with this is because you just pay this once a year, right? It reports every single month after that. So anyone telling you like, hey, get the secured card, start charging it, carry a balance to build credit, they just don't know what they're doing with credit, because that's not how credit works. That's not how credit cards work, right? They're not just gonna like not report the history, right? So again, that's what I would do. Secured card, $500 deposit, pay the annual fee, and then just let it report. And then that's it, right? And then what do you do from there? Like, basically, you just start adding more accounts over time. And like here is, well, hold on. Before we go into the easy accounts, let me go into like the other method, because this is relationship-based lending, right? Like, and then there's another way to do it, because I've had people where like, they're like, David, I went to my main bank and they like denied me. Like I did exactly what you did. I have my checking and savings there. Like they still won't even give me the secured card or even an unsecured card. And it's like, okay, this is what you're gonna want to do then, okay? And this is like the sauce. This is like how you do it. This is how you get an 800. And then by the way, like I know how to do it. It's just like, thing is, I don't remember every single little piece of finance. There's just way too much, right? But basically, if you don't have this book, like this is where like you can get like the actual sauce. Here, I'm recording a video as well, so I'm gonna show them and then you. But basically, like, the reason I buy this content, by the way, is just like I'm a nerd, obviously, when it comes to finance. So I'm always like just researching, and then that's how I know like what funding companies are actually legit and which ones are just promoting fraud and scams, right? So, and this guy right here, this guy specifically, Rayon, he's a genius in credit repair. So, yeah, and I do credit repair. Don't get me wrong, but this guy Rayon figured it out. Like he's a badass. Anyway, so you're gonna need some secured accounts, some builder accounts, right? So let's say you can't do relationship based, then do builder accounts, and this is how you do it. Oh, and by the way, not only can you like obviously like ideally you're gonna want to support Rayon, right? But like you can go to my free school, and yeah, like I do have all that documented, and it's 100% free. Okay, but anyway, I'm just gonna quickly go over the actual stack. I'm not gonna go into like the actual how-to, like how do I process everything, right? But anyways, there's 10 accounts that you're gonna want to get, and then minimum is $3,000, right? For these accounts, because they're builder accounts, right? So you're gonna want $3,000 minimum to do this 10 account stack. And the reason you want to do 10 accounts is because, again, even though they're builder accounts, they're all gonna report as primaries, okay? And we're gonna get into authorized users and how to actually use authorized users, okay? But first, you just need to understand why we're doing this. So 10 builder accounts, all primaries, and then basically, really it's like this. So secured card, right? It can be anywhere, like really ideal anywhere. It doesn't have to be like exactly like how it is in here, where it's like just go to Discover Capital One, right? You can just literally do secured. Let me go CC. CC is credit card, by the way, okay? And 3, you do kickoff, right? Something like that. And if you can't get them all, like don't worry, you know. Ideally, you want to catch them all, just like Pokemon, right? But sometimes it's just not possible, right? And that's okay. And I'll tell you guys like how like you can get through it. So let me just write this down. I wish I had a better board to like do all this, you know, but it's okay. So credit strong, and then 6. Bop, bop, bop. What's the 6th one? Wait, hold on. Did I not? 1, 2, 3, 4, 5. Oh, I messed up. Hold on. Oh, it doesn't matter actually. It can be any. So self 7 is gonna be X. Oh, and then you want some rent reporting. This is the extra app. So yeah, and then damn, bro. This is why here we'll go. Can y'all see this side? Yeah, you guys can. So then I'm just gonna go like this. So 1, 2, 3, 4, 5, 6, 7, and then 8 is rent reporters. Snap. And then I'll get it again. I'm just writing down first the actual stack, okay? And I'm gonna go through it as to like why you want to do it like this. So then 8, 9, and then 10. So pledge loan, right? So pledge loan. And if you don't know what a pledge loan is, I'll tell you right now what it is. Don't worry about it. Okay, boom. So you need to add some builder accounts, okay? And if you can't do relationship-based lending, okay? Or if for whatever reason you did do it and it didn't work. Now, let's see here. And by the way, if y'all have any questions, just drop them in the chat. I'm just checking any questions. But I appreciate y'all watching. But anyways, okay. Builder accounts, 10 accounts. You're going to need 3,000. And if you don't have the $3,000, it's okay. But if you at a bare minimum, this is what you need to be able to do all this, okay? You get the secured account. This is like 500, right? This is another 500. And then, again, you're going to want to check and see the different costs for these things. Because, Kickoff, for example, they think it's still 20 a month, right? You can always double check. Self is 25. Credit Strong is $38. What is it? Meet Ava is $9.99. it should still be $9.99. The extra app, that's another $149. This is all money, right? And then rent reporters is gonna be $95.40. So here, I'll go like this, $95.40. And then the pledge loans, it's gonna be like $1,500, right? About each. That's 1,500, and this will come out to 13 actually, like that. So basically, these are builder accounts. Again, ideally, you're gonna want to do the relationship-based lending that I mentioned at the very beginning of the live, right? But you can also do this, because like sometimes people go to their main banks, they still get denied. So then, boom, builder accounts, 10 accounts, minimum 3,000, and then you get your secured credit card, put a $500 deposit. That's gonna stay locked up, right? And it's okay. Who cares, right? We're here to build credit. You gotta like, this is for people that are building and rebuilding. You gotta like give something to get something back, basically at the start. That's $500 for the secured credit card, and then kickoff, Meet Ava, Credit Strong Self, and Credit App. These are all monthly, right? So they're monthly, right? And then the pledge, the rent reporters, you're probably gonna have the hardest trouble doing it, but it's okay if you can't get rent reporters on. But that's like another $95.40 a month, right? And then the pledge loan, you're gonna want to do $1,500 and then $1,300. And like you do all this, and they're gonna have 10. What is this? I can't. Yeah, I appreciate you trying to co-host, brother, but yeah. Anyways, what was I saying? Yeah, you're gonna have 10 primary accounts, and then yeah, like these reporting on your credit, like yeah, the banks know that they're not like premium accounts, and that's okay, but it's because we're getting your foot in the door, right? Anyway, the way pledge loans work is you put a big deposit down. It may be like the bank may say, credit unions are very popular for this, by the way. Navy Federal, like everyone talks about Navy Federal, but like you can go to like any credit union. It doesn't have to be Navy Fed, okay? Any local credit union, a lot of them offer the pledge loans, right? And then basically what you do is say it's like $1,500, right? You put the $1,500 down, and they're gonna say, okay, we're gonna put it in this like savings, or typically it's a CD, something, right? And the interest is typically less than 5%, and they just lend you back your own money. It's really weird, right? But point is, it's just like a way for them to securitize the money and be able to trust you, right? So that you can build history. The moment you get the $1,500 back, you pay back 80 to 90% of the loan, right? And it's like, why do we do that, David? It's like, okay, because you basically are getting your money back, and it's going to be reporting, and you just let that small little balance sit, and it's going to be reporting as an actual installment loan, right? And that, like, again, understand the algorithm, like the personal credit algorithm is very automated. So that's why it works still, okay? But anyway, you do 80 to 90%, and then you're probably not going to have a payment for the next, I don't know, however long your term is. Generally, most of these terms are like a year or so. So you might not have to make a payment until like the end of the year. Just look at your paperwork at the end of the day. Then you take the remaining balance that you just took from that pledge loan, you get another one, right? And you do the same thing. And then by the end of the month, if you do all of this within 10 days, by the end of the month, like you're gonna have an 800 credit score. Now the last thing you have to do, because not only are these like builder accounts, so yeah, they do have like a different grading system to underwriters, but you also understand that these are all going to report as new accounts. So what's going to happen is you're going to have a 1 month age, right? 1 month credit age, which is not good. They only have 1 month of data on you. So they're going to be like, awesome, you have 10 primary accounts, but you've only had them for a month. Like, we don't even know if you could actually handle any of this responsibly. So good for you, but hey, you're going to need to wait another like 6 months to a year before we're ready to lend. And it's like, but dude, I need to like build my credit, or I need to rebuild my credit. I can't wait a year. So what do you do to age hack this? And this is how authorized users actually work. Okay? You need to do this first to get primaries. But then the authorized users age hack. That's all it does, okay? And so this is what you're gonna want to do. And by the way, don't worry, like I upload all my lives after on my YouTube, so don't trip. And it's free, you know. And I do this every day basically. Anyway, so you just only need 1 to 2 authorized users. I'm gonna do AU like that. AU stands for authorized users, okay? So 1 to 2 AUs. Honestly, the limit doesn't even truly matter, but like if you want, like minimum 10K, right? Ideally, they're not using the card as well. So ideally, utilization equals like less than 15%, bro. Like you're not gonna, once it's higher than that, dude, they're hurting you more than helping, okay? And again, like a good example is when I was 21, I just went to my mom and I was like, hey mom, can I get put on your Nordstrom's card? And by the way, I messed up. I didn't know, but like you're gonna want to do regular bank cards because again, it has to do with the weight and the types of accounts, right? So like a store card isn't seen as a premium account compared to like being added on to like say a regular unsecured Visa card that you can use anywhere you want, right? Anyway, so that's where I messed up on. Like I had it kind of right, but I told my mom to put me on her store card. It still worked, but the point is, the reason I went to my mom is because my mom's very conservative with like all this, and she literally had, I think it was like a $30,000 limit card. It was like had 15 years of history, right? Like it was a really good card. And she had it at a zero balance. And so then when I added it to my credit profile and I did those primary accounts, all those builder accounts, my score shot up. And then what I did is I went and got personal funding, and that's how I got $100,000 at the age of 21 in personal credit, right? That's a whole other story, by the way. Maybe I'll tell it one day. And that's how, actually at the end of it, like just to kind of like tie a knot on it, right? 2 years later, I ended up defaulting on the 100,000, and then that's when I learned credit repair. So a lot of the stuff, by the way, everything that I teach people, it's like, dude, it's like this isn't theory. It's all been tested on either on my profile or my best friend's profile, and that's just the way I learned. And that was like the only way you could learn 10 years ago, back in 2016. And the website was called myfico.com. If you are curious, right? You just type in whatever you want, and you just have to organize the data. So, anyways. So ideally utilization's 15%, minimum 10K, 1 to 2, and then age, you're gonna want do 7 years, okay? And then that's gonna age hack your credit. That's authorized users is only for age hacking, and it only works on the personal side, okay? One of the main reasons why is because the banks have already automated it to the max, right? And they're okay with taking the risk of like letting a few people slip through with these little hacks. But on the business side of things, it is completely different. It is still very much a manual process. And that's why, like, even though you add an authorized user, you still come back either with low limits or denials. And it's because you don't have an actual strong credit profile with multiple primaries, proof that you know how to manage debt, right? So again, works on the personal, but on the business it doesn't. Anyway, so 1 to 2 authorized users, minimum 10K, ideally 15%, age 7 years. Now, this is the secret as well to getting an authorized user without having to pay, like, I don't know, people are charging like insane rates, right? Some places charge like literal like 2,000-3,000, right? Total scam in my eyes, because the way again, go to your parents, right? But if you don't have like a parent like that or whatever, go to a friend, right? That was another thing. Like my here's a good example. My best friend Chris, that's who I learned this with, right? He's like he didn't, like, he's adopted, right? And so he's like, yeah, dude, I'm kind of like just fucking floating by, you know? And like, dude, don't worry about it, right? And our mentor at the time was like, dude, just like, you can be added on my card, you know? And like, what I'm getting at is like, dude, just be like, you can build relationships like that with people. Just be honest. You don't have to pay them, or be like, hey man, do you want to make an extra $100? AU's authorized user. Oh snap! I didn't see your question, bro. I apologize. I'm like vibing right now. So can you have two pledge loans at once? Yes, you can. And what if you don't have no one to be an AU? So, oh yeah, that's what I'm saying right now. So basically, like, go to a friend, like, or someone that you know, like, and trust, and just be like, dude, I'm just trying to build my credit. Like, you don't have to give me the card. Just don't, like, tell them not to send one, and then just pay them like $100, and they're gonna say yeah, right? You might have to bump it up a little bit, but like, dude, people, like, you'd be surprised, and you ideally go to someone that has no clue like what any of this is, right? And that's how you like buy some, like that's how you get an authorized user without having to pay an insane rate. Okay, so I hope that helps. But like, if you really do need authorized users, like I do have a contact. And again, this is not a sales pitch. I'm not trying to sell you guys anything, right? But I'm just letting you know, like, I'm trying to give people as many resources as I can to actually do this, you know. But like, if it really comes down to it, where like you really just can't convince someone to have to be added on their card, then just what I would do is, I guess, maybe join my group, consider like looking at the authorized users, right? But anyway, that's enough of that. The main point though is you do this. Now, once you add the AU, again, your score, it doesn't happen overnight, by the way. You're gonna have to wait for everything to report. So like, wait, I don't know, 1 to 1.5 months. Whenever things start reporting, you're gonna see score is gonna go up. So go boom, boop, shoots up, blah. It'll go up, okay? And now you're gonna have everything that you need to basically not get flagged by the personal credit algorithm, right? And again, the reason it works is they've already automated it to the max, okay? So that's why it works. So the score shoots up, and it's like, okay, now what do I do, David? Now that I've done this, and I have my builder accounts and all this, what do I do? I'm gonna tell you the secret as well to getting, what's it called? The those insane limits, right? And it all comes down to the type of bank, right? I know a lot of people are like, bro, go to Chase, go to B of A. Like they're talking about the national banks, but understand that the national banks have a larger risk pool, right? So their risk pool is literally like this, right? And like, the reason why that matters is if they let in too many of the wrong people that default, it'll mess up their what's it called? Their profits, right? Profits go down. And this is important to know, because if you understand how banks view basically profiles, then it'll make sense as to like where to go to get the cards, right? So profits go down, and the reason why they have to be strict is because, again, it's a larger pool, and so if they let in too many of the wrong people and they default, profits boom go down, right? And so what does this mean? This means that national banks are very strict. They have way more strict requirements. Equals strict. And it's like, who's the national, like I already said it, Chase, Wells Fargo, Amex, BOFA, US Bank, all those national banks, the top 5 banks in the US, right? Those ones are the most strict, okay? Especially Chase. Chase is it's actually a premium bank. Like, if you make a lot of money, the only place that you should go to is Chase, because if you are like a multimillionaire and all that, they have private banking, and it's awesome, right? But again, now, local credit unions and regional, they're different. And this is how they're different. Their risk pool is a lot smaller. And so they're able to take way more riskier profiles, right? They're able to do that, and they're also more willing to work with you because their whole idea is about helping the local economy, right? The national banks, they're more thinking on a more macro level, a more bigger level, more international. And that's why they're so strict on who can come in, because they're going to have to sell off the debt to make money, etc., right? Like, that is the deeper reason why, as to why they're so strict. But again, we don't have, like, if you understand that piece, that like if they just allow too many of the wrong people, their profits go down, and you understand that local and credit and regional, they're more likely to take that risk, then you know that you should be targeting these banks here, the local credit unions and regional, to then go and get your financing, like for your the personal side of things, right? And so if you want to get some insane limits after creating, like doing the builder and stuff, I would target credit unions, right? Your local credit unions. You don't have to do the Navy Fed play. Like the only reason why people talk about like Navy Fed this, Navy Fed that, is because that's just what they were taught. They took a course, watched videos, and they're just regurgitating the same thing. But I'm telling you, like, any credit union has is just as good as Navy Fed. Okay, they have the pledge loans, they have all that, and if you add like maybe this is what I would do. Once you actually have your builder accounts and all that, this is what I would do. I would do credit union, like boom, boom, and then maybe 3 actually. Like you could literally just do a whole credit union stack, and you're easily gonna rip like anywhere from like north of $150,000 in funding. I'm not even kidding. Like you are more likely to get a $20,000 personal credit card with your local credit union than you are with Chase. Okay, so you can literally just do credit union, credit union, credit union, right? But now, here's another secret though. Let's say you're like, that's cool, David, but like you told me that I have to have a solid personal profile, right? So, and you were telling me about relationship-based lending at the beginning of this. So like, how can I start building the relationship while also rebuilding my credit? So then at the end of it, not only do I have a strong personal credit profile, but then I also already have the relationships with the banks that I want to go and get the business funding, right? So then what you do is you may add like 1-2 credit unions, right? And the reason why is these are layups, right? These are your wins, right? You want to at least get some stuff, some primaries that are not builder accounts on. So you always hit credit unions first, okay? And you get your layups, you get your primaries, and then that's when you start looking at like, I don't know, B of A, let's start building that relationship. Let's go to Chase, let's build that relationship, right? And like, this is why they tell you to do the account openings, right? They're like, yo, go open that checking account, et cetera, right? But like what I would do is I would just do cold apps, honestly, right? Unless you have like a bunch of money, like if you have like anywhere from like $5,000 to $10,000 to just put into checking accounts like that, then maybe do the account opening, right? But point is like I would do credit union, B of A, like, and again, like it doesn't have to be B of A, like whatever bank you want to get the business card with, right? Credit card, and then 5, I don't know, U.S. Bank, right? Credit card, and then like, yeah, you might get like, let's say like this is, well, you're most likely gonna get these here. So once you have like an actual base, so let's just say like approved, right? We'll just do, I don't know, approved, right? Just trying to go quick, and then U.S. Bank, let's just say denied, and like you just go through, and by the end of it, anyone that has denied you, delete the inquiries, right? You just delete them. If you don't know how, don't worry, like just go in the free school group. But anyway, if you don't know, basically you delete the inquiries, but do not delete inquiries that are attached to open accounts, okay? Because they will shut them down, all right? So don't do that. Only remove inquiries for the ones that they denied you. And then from there, you just do it again, right? But this piece here is called credit stacking, by the way. And then, so all this is like called credit stacking. And then now comes the fun part of like learning how to run it up, right? And the fundamentals to credit stacking, like if you were following along from the very beginning of this live and you truly understand the basic fundamentals and concepts to personal credit, then you're gonna know exactly how to get the money for your business. And then from there, if you want to scale up to like commercial, you can also do that. And the reason I say that is because like that's what I do now. I started off with the personal credit, I did the business financing, and then now I'm doing commercial lending, right? And again, like the same way I do it for people is how you do it for yourself, by the way. So that's why I can teach it both ways. I can teach someone like how to do it, and then also like how to do it as a business as well, right? Anyway, So then credit stacking is what this is called. And it's like, okay, how do I credit stack that? Why do I need to know how to credit stack and what? So this is why. Because not every bank is going to be pulling from the same three credit unions, right? There's three credit unions. They call them CRAs, right? A CRA is just the credit reporting agency or credit union, or I mean, the credit bureaus, right? And it's these are the three. We got Experian, and I know this might sound silly, but like literally when I was first learning, I didn't even know like they had this, like straight up. I was 21 as well, and it just has to do with no one teaches us in school. Like that's it, right? Anyway, so three CRAs. Question mark. Who are they? Experian. We got Equifax. Okay. And then from there we have TransUnion. Okay, these are the three major banks. We're not going to get into all the weird stuff about like the secondary reporting stuff. You don't even need to worry about that. Like, unless you want to do it as a business. But right now, I'm just trying to help people. So we're not even going to talk about that. So, Experian, Equifax, TransUnion. If you don't know where to get your credit report, like, how do I get it? There's like free annual credit report, right? Annual credit report. That's like the one, right? It's not going to give you your score, but it'll at least tell you what's in it, right? Oh, snap, dude. So I have 6 credit cards, different banks, different bureaus. If I have 6 hard inquiries, 1 bureau, don't delete if open. Yeah, exactly. So basically, like the inquiries you're going to want to remove are for basically the ones that got you denied. If the inquiry is attached to an open account, do not dispute it, because if you do try to remove the inquiry, they're just going to shut down the account. Especially credit unions. Credit unions don't play around with that stuff. They'll just shut your stuff down and be like, hey, like that's super weird that you just disputed our inquiry. We just don't want to do business with you anymore. And they'll just ban you from the bank. Anyway, so free annual credit report is how you get your stuff. Or you can just buy something like Experian, right? Well, hold on. Experian.com, like you can get the actual paid report. This actually gives you your score. If you just want to know what's inside, then you can just go to freeannualcreditreport.com and it'll tell you what's inside. Experian.com gives you your actual score. You have to pay them, right? Whatever. But back to what I was saying, this all again correlates with like how to do the credit stacking. I'm just telling you guys like who these people are, because not a lot of people know these people exist. Anyway, on to the next thing. So now that we know that there's 3 CRAs, and I'm going to go ahead and abbreviate, right? The way I abbreviate is Experian is this, EX, Equifax is EQ, and then TransUnion is TU. Okay, then boom, boom, and we'll go like that. Boop. So why is this important to know? Because not every bank is going to be, hold on, that won't look bad on me? What do you mean? So if I have, no, yeah, dude, like if you get denied for a card, oh, that's another thing. If you get denied, it's not bad. It doesn't mean it's the end of the world. Think of it as getting more information, by the way. If a bank denies you, like it's actually really good, because it's going to literally tell you what's wrong with your profile, and you just fix the things that are messed up. That's it. Then you try again 30 days later, okay? And then again, yeah, it's not bad to delete inquiries that are not attached to open accounts, okay? I mean, yeah, it's not bad to delete inquiries attached to open accounts. Anyway, let's just move on, because if I keep harping on it, I feel like I'm gonna confuse people. So, Experian, Equifax, and TransUnion. Now, because I've been doing this for so long, I know that Chase pulls Experian like 90% of the time. Amex does Equifax. Not what is it? TransUnion. Who does TransUnion? U.S. Bank does TransUnion, right? So like, look, so that we can see better, right? So this will be Chase, right? This will be Amex, and this is gonna be what's it called? I said U.S. Bank, yeah, right? And then that's as simple as credit stacking gets. Literally just avoid getting the same credit pool. And if you don't know like where they're pulling from, all you got to do is just call and ask. Be like, hey, I was thinking about applying for your credit card. I think your bank's super cool, right? Whatever, right? And then you just say like, by the way, before I apply, I just wanted to know what credit bureau do you guys pull from when I apply for this personal credit card, right? And then they're gonna tell you, it's not that hard. But basically, this is how you credit stack. You just avoid the same bureaus. And again, if you don't know where to get the data points, you literally just call the bank and ask, like, hey, what bureau do you pull from? It's that simple. Or you can go to like myfico.com. Like, they have all the data points on there. You just have to go through the forums and organize everything, right? Anyway, so yeah, and then you just go through, start adding your banks, like boom, right? Boom, boom. And then another thing is like the most that you're gonna want to have under one bureau, max. So like here are the rules: max 3 inquiries, right, per bureau. Now there's cases where you can go up higher, like if you're gonna be high risk or like riskier with your stack, then at 5 is like the total absolute max, right? Snap, whatever. You know what I mean, right? So 3 inquiries if you're conservative, right? And then if you're trying to get, like, if you're just like going hard, you're like, dude, I don't care. I don't have the time to like strategize. I'm just gonna run it. Then keep it at 5. Anything more than 5, you're just gonna get auto denied, and you're most likely gonna get auto denials around the 4th or 5th inquiry, right? But sometimes people are able to go all the way through up to 5 inquiries on one profile and like get approved for all of them, right? Everyone's credit profile is different. You're just gonna have to test it, right? If you do it on your own and do all that, right? Now, there's another piece to this though, besides inquiries, that you need to worry about, okay? And this is like a deeper layer, and this is like the stuff that I know as like a funding agent. So what's the deeper layer you're talking about? And it's not secondary reporting either. No one, like secondary reporting, no one actually uses. They only use it when you first open an account to see who you are, to make sure you can pass fraud checks. That's about it. But this is like the second layer, or like a deeper layer. It's the underwriters, right? And you're like, wait, I thought you said personal credit's automated. And UW is underwriters, by the way. So if you ever see me put UW, it's underwriters. Anyways, and you're like, what do you mean underwriters? Like you literally told me that it's automated, but now you're bringing up underwriters, and it's like, yeah, everything's automated, but there's like third-party underwriters that underwrite for other banks, right? And so here are some of the most common ones that come up, right? There's like Elon, right? This is the most biggest. They're actually owned by U.S. Bank, by the way. So owned. It's actually cool to know. So Elon, there's TCM, right? Card Assets. Who else? It's like Merrick, I think. Merrick. I'm pretty sure it's Merrick. And then FN. There's a lot. But these are like the main ones that come up off the top of my head. The only reason why I can fire them off like that is because I've been doing this for 10 years, right? But basically, this is the next thing. So not only on top of the type like inquiries that they're pulling from, you also want to know the underwriter, okay? And the rules to this is max 2 apps per underwriter. So here, let me get this out. Actually, we'll go like this. So max 2. Per UW, okay? So, again, the underwriters, you're going to have to look out for them. And here are some of the most common ones. And the max that you ever want to do per underwriter is 2 applications per underwriter. So not only do you need to look out for the inquiries, right? But then you need to also look out for the underwriter. Now, it's like, how do I find out who underwrites their cards in-house and who is using a third party? This is how you do it, okay? Because if you ask them straight up, like, hey, who underwrites your card? It sounds super weird, like straight up. They're going to be like, dude, like, how do you know what underwriting means and you're a consumer? And it raises red flags. And so, like, and it's not bad. Like, it's not bad to ask those questions, but, like, these bankers, dude, I don't know. They can be weirdos, like straight up. So this is how you find out who the underwriter is, right? You just ask them, right? This is how you ask them. You just be like, hey, who issues the card? Who issues card? That's the question, right? Who issues card? Question mark. Your bank or a third party? Oh, snap. And that is the question. That's how you ask them who underwrites their credit cards without sounding like a weirdo. Okay? You just be like, hey, and it, like, I'll give you a real life example. Like, if let's say it's a credit union that you're trying to apply at. You're like, dude, they have really great, I don't know, personal credit card, whatever. But you're like, no matter how much I dig and dig and dig online, no one has information on this bank. No one knows who pulls what from what or who underwrites what from what, right? So what do? You just call them. Or you go in person, like literally just go in person, sit down with the banker and just tell them like, hey, I was on your website. You guys came up as a local credit union. You guys work with whatever you want to say, right? The reason I do that is because it perceives you as high value, and perception's everything in banking. But anyways, there's a lot of things. But point is, that's like my pitch. I'd be like, hey, I was on your website, and you guys offer some awesome personal credit cards. I was wondering though, before I apply, because I've worked so hard to build up my credit, I just want to know, what inquiry do you guys, or not what inquiry, what credit bureau do you guys pull from? And they'd be like, hey, that's awesome. Like, we're happy to, share that information with you. Good job on building up your credit, whatever they say. And I'd be like, we pull from Experian. Be like, okay, great. Hey, I appreciate that. Experian, I think this will be a good fit for me then if you're pulling Experian. Also on top of that, I've noticed that sometimes banks don't issue their own credit cards. It's like a third party, and I don't know. Sometimes I just think that's a little strange. But either way, though, you guys are still a great bank. Who issues your credit card? And then they're gonna tell you, oh, we do it. And if they say we do it, that means they in-house underwrite. But if they say like, oh, it's a third party, that's how you know they're using a third party underwriter. And then all you gotta do from there, sometimes the actual terms and conditions of the actual credit card shows it. It'll show you like, hey, this card's issued by so and so, right? Or sometimes if you actually click on the website, it redirects you to a third party website. Other way to know that it's not underwritten by the bank, okay? But again, if you're just ever unsure, you just ask them, right? And so basically, this is how you do a personal credit profile stack, right? This is how you go from building / rebuilding into actually getting funding, right? So, yeah. Right now, if you have any, like, ideally, by the way, like, I'm just going to keep going. And if you guys ever have, like, any questions, concerns like that, like, straight up, just stop me. And I'll be sure to answer any questions, okay? So, again, this is how you do this. This is how you do that. The rebuilding and building personal credit profile. Now, I am recording over here, so I do got to say goodbye to my recorded viewers, but I'll still stay on with you guys and kind of just answer questions as they pop up and continue to go over just credit fundamentals. Anyways, everyone else on YouTube, I appreciate you guys for stopping by, taking a look at my video. You already know, got the free school, right? Take a look around, questions, concerns, just reach out, happy to help, okay? Or just follow, like literally just follow my video, like just go through all my videos. You can have all your questions answered, okay? Anyway, appreciate you guys. I'll see you on the next video.